The solar sector is heating up as more solar panels are being produced to meet demand. A new industry report says solar panels are being installed at a faster clip, up to 66% in the first quarter versus a year ago. And production for those devices rose about 31% in that quarter as well. Cheaper solar panels, expiring government incentives are both driving this growth, and there are no signs of letting up. U.S. solar market is expected to double its growth this year. So given the demand for solar power, where are the buying opportunities for investors? Let's ask Quinn Tatro, president and owner of Tatro Capital, and also Theo O'Neill, analyst at Wunderlich Securities. Thanks to both of you for joining us. Quinn, let me start with you. I guess I want to drill down on some of those stats. You say the solar market can double its growth this year, and that might even be conservative. From what to what? What are we really talking about?
Well, the bottom line is that we've seen costs in production come down. Now, that's been a hindrance on a lot of corporations out there because it's brought on a tremendous amount of supply. As analysts will tell you, that's, again, crimped margins and profits and so forth. But what it's doing is it's allowing the end user to be able to purchase these. And we're seeing costs come down to where it's actually now a potential for someone to put solar panels on their house, or companies out there to really truly invest in this technology. And that's been a long time coming. Again, it's been something that's hindered the stocks because, as people will say, well, it's tremendous amount of supply is coming online. But that supply will turn into end user demand, which I believe will ultimately boost the solar stocks down the road.
I'm not sure I've seen supply turn into demand, but I might let that go for a second. Theo, you say that raw material costs for solar panels are falling. Why is that?
So that's part of the equation here. We talk about costs coming down for solar panels. The raw material is polysilicon. The world is awash in it right now, and there's a couple of trends going on. One is companies like GT Solar are producing equipment that buyers can get a hold of and produce polysilicon very cheaply. You've also got the Chinese are trying to produce all their own poly internally, and so that leaves a smaller export market for companies in the U.S. and in Europe. And we had a temporary supply disruption in Italy this year that backed up from the solar panels all the way up to the raw material side, which also left a lot of poly for sale. So it's good, and it is. I agree with the other guests here. It's a complete positive for homeowners. I think we're still a year or two away from seeing a lot of demand increase because of the lower cost, but it's definitely on its way.
Quinn, what are your picks in the area? I know you don't like the Chinese companies. How come?
Yeah, you got to stay away from the Chinese companies. Anything that's related to a Chinese company right now is under scrutiny with all the scams. It's very tough to value them with all the challenging financial statements that are coming through. So the pure plays in China are to be avoided, in my opinion. What I like are the diversified companies that are in the space that people are not necessarily aware of. For example, a position that we own at Tatro Capital is Sempra Energy, ticker symbol SRE. It's a diversified utility company. It's involved in the customary utilities, liquefied natural gas, but it also has a growing and very profitable solar space. Not to mention the fact that the company is yielding almost 4%. Okay. So you're getting paid while you wait. I think the diversified plays, such as Dow Chemical, Applied Materials, are the way to play it right now.
And Theo, real quick, your number one pick?
GT Solar and its outsourced partner, Tech Precision.
All right, guys. Thank you so much for joining us. We appreciate it.
Thank you.